Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's Wednesday, and it is October 24th. Sorry, I have to kind of think through that, but we got a bit of economic news to go over today. Finally, this week, Monday and Tuesday were kind of a little light in that regards, but today we start the week off. We'll start off with the market manufacturing PMI flash, kind of mouthful right there. Now, in September, we had a 55.6. Anything considered on these two indexes are considered optimism and positive news here. So 55.6 in September, and it improved in October to 55.9. So this is a pretty good number here. I believe this is a kind of the high for the last 5-month high right now, which is obviously a good sign that manufacturing is getting back on its feet here. Then the other item here they come out with is the non-manufacturing, which is also the services. This is kind of talk about the service industry here. And in September, was at 53.5, and it jumped up to 54.7 in October. So again, overall, according to market manufacturing, very good numbers right here. So hopefully we continue to see this trend here. But we got new home sales for the month of September. So in August, we had 585,000 annualized units in sales. Forecast supposed to go up to 620. That was the forecast for September. And it came in a pretty big disappointment at 553. So our analyzed units dropped from 585 to 553 from August to September here. So obviously not a good sign for new home sales. Last but not least, about 11 o'clock Pacific Standard Time, we'll get the Fed Beige Book will be released. This will kind of give investors a insight into the economy, where things are at on a regional basis here in the U.S. and see where the different industries, what's doing what in each region. And as the Fed kind of provides each other's regions in this report here. And this will be, again, released by 11 o'clock Pacific Standard Time. Don't expect it to be a market mover today, but if there's something in there that could surprise investors, they may look at it. So let's jump ahead here to the headline news. Stock market is currently down, kind of like yesterday, but not quite as dramatic. Yesterday, the Dow was down well over 500. So far, right now, we're down about, on the Dow, is down about 200 this morning. Now, we are still getting Q3 earnings reports being mentioned, and with this current environment, this is kind of investors are looking at. They're being a lot more nitpicky with this because the Fed has been pretty aggressive. Maybe some critics are saying too aggressive on their rate hikes. Now, with this higher rate hike solution with the higher yields, we also got concerns on the geopolitical level from China having their Q3 GDP came in disappointing. Of course, the stock market has been, they're trying to prop up the stock market, but there's may or may not be confidence over there on the stock market. And then you got Europe with Italy going back and forth with EC on their budgets to the Brexit, England trying to break away from the EU, but trying to have an agreement in place for trade. So that puts into question about the global economy, if there's any growth in there. And so they're going to be really nitpicky. So unless a company, especially these bellwethers, come in with much better than expected returns or numbers on their Q3 reports, if they just hit it or come up short, they're going to get hit pretty hard so far right now. We're kind of peaking, it looks like, in the stock market. And looking at the S&P, it's actually it's down well, kind of down well below its Fibonacci level. It was testing it yesterday, and it helped us on the mortgage-backed securities. And as you'll see, it will be helping us again today. And it closed just barely above the Fibonacci, but today it started like at the number and it's well below. Unless we have a quick reversal again like yesterday, just be on the watch out for that. And then throughout the day, we're going to have a few Fed speakers speaking today and Fed members speaking today. And we'll have to kind of wait and see if there's anything, if any of them say anything out there that could cause attention to the markets that may spook the market. So we never know. Okay, so sometimes things get said and markets react to it, and we'll have to kind of see if that happens today or not. So speaking of such, we'll look at the bond market. Bond market is the recipient of the good news or the bad news of the stock market. So many times we work in different directions. So the stock market, as it's down, it's helping out the stock market. We're currently up about right here. This graph is showing 19 basis points. Yesterday we were doing really well. We had that big jump. We're way up here, but as the time passed and the stock market recovered a bit, even though close in the red. It did close, the Dow I think closed just down about 100 points, whereas it was way down like 500 points. We only closed like 9 basis points higher than where we were on Monday. Today we're up about 19 basis points. So we'll have to kind of wait and see if we continue that trend right now. We got plenty of room here at the ceiling here until we hit the 25-day moving average. But if it reverses, we also have plenty of room below us for our next floor of support here. So then here's the 10-year Treasury. It's right now testing its 25-day moving average. If it could break below that, that can become a ceiling, which could help us out and keep interest rates, help keep interest rates in a better momentum here. So again, we'll have to kind of wait and watch, because we also, as you can see here, it's not that much further down at 3.1, basically 3.11. We got another floor of support at the Fibonacci level here, and as it's testing, currently it's about 3.12 or 12, 3.12. The yields are so, but it's still quite a bit of a drop compared to where we were touching at 3.1, 3.25 basically last week. So kind of watch out for that here. So that pretty much wraps things up. Our rates are better today, which is definitely, for those who are refinancing or looking to buy a home, obviously that's good news. Those who are relying on the stock market, not such good news here. But anyways, if you guys want to get updates, especially with the Fed Beige book coming out later on, or any Fed speakers, so they say something, I'll put that stuff out on the Twitter. So you can find me at Mike Bjork. So any changes, if you want to get updates throughout the day, just come over to Twitter. You can find me in there, and I will be posting on there as well. All right, you guys have a great rest of the day. Well, thank you so much for watching. We'll see you guys tomorrow. Bye-bye.